Hi there, Serial Trader here. I'm going to have a look at the major US indices, but before I do that, I want to discuss something first. So I've had an idea recently where I want to grow the channel, and well, I'll discuss some details here. So what I'm looking to do is basically put out a bunch of content, free content, of basically everything I know, or at least a good summary of everything I know, kind of a step-by-step guide, I suppose, to analysis and trading. And a lot of the stuff I've learned over the years, and it's been many years of doing this and learning, I had to get from different sources. There was no one place I could go to that had basically everything I wanted or needed. And I had to just kind of haphazardly, in many cases, stumble upon content or techniques or ideas or knowledge that I've now kind of put together in my own way as time has went on. And I've been thinking, well, it really would have been helpful if someone could have done all that before me and put it all together and made the path much shorter for me. Now, that's just as far as analysis and stuff goes. Then there's actually the trading side of it, which, by the way, is completely different and separate from the analysis, although you do certainly base trades off analysis. There's no question about that. But that's just one component of having an actual trading system. I mean, I could go into so many details, and I will. But just to summarize, position sizing, the type of instrument to trade, there's all sorts of things. Where to place stops, or to have stops at all, depending on what type of trade it is. Options trading, how do options work? There's so much to know there. And there's a lot I think I can share about that too. So basically just putting everything together, and I think I'd like to just name the series or the system or whatever you want to call it, serial trading, kind of named after the channel itself, right? So that's an idea that I've been having, something I think I'm going to go hard on here pretty soon. You can sound off in the comments section what you think about the idea. Do you like it? Are you interested, not interested? Any specific things you want to see? Basically any feedback, even negative, I don't care. I'm pretty thick-skinned, so go for it. And we'll see what we can do with this. And then maybe eventually, once I put out all this free content and have it nicely organized and cataloged in a cohesive way, I know for a fact that even after I put out everything I know, and basically everything I do, someone can still come and look at all that and still not really truly get it. It takes so much experience and time in the seat, even when you have all the knowledge to really put together. So I think later on maybe that could lead to some sort of, I don't know if you want to call it coaching or consulting, or even just having a community, maybe a paid community where there's some sort of relatively low membership fee depending on how many people are in it. So here's the thing. If I do one-on-one training or coaching or mentoring, that would be pretty expensive because, I have to be reasonably compensated for my time and effort. So if it's just me spending my time with one person, that's going to be a fairly high fee. Whereas if there was a larger group of people all kind of doing that with me, my time could be compensated in a much smaller, increment by that many number of people, like a scaling effect, if you will. Where a whole bunch of people only have to pay $10 instead of one person paying I don't know I'm just making these numbers up. I haven't even looked at what I would think about as far as a fee schedule or anything. But instead of one person paying $1,000 for a certain amount of training or coaching, maybe a whole bunch of people pay $10 instead. Anyway, that's a little bit off into the future here for now. But just throwing it out there, showing my face here for y'all to see. And I guess I'll leave it at that for now, and we'll jump into the analysis here. All right, so let's have a look at the chart of SPX to begin things off. And I'm going to look at the weekly chart first because I think there's some considerations we need to make here. And that's why we'll start on this larger time frame first. So we are still, I believe, progressing in this impulse wave off the March 2020 low. Okay. And I still like the fact that we have this initial wave 1 up. We have an ABC for a 2 with a truncated C wave. But to me, this overall structure from oh, what is that? August of, well, I think it was either end of August or beginning of September 2020, which basically completed near the end of October 2020. I think that entire section is a corrective move. Now, there's probably some people that would argue, no, no, this is the 1-2, and this is a 1-2. I disagree. But as far as the wave count goes, there's always going to be, well, not always, but often going to be that subjectivity. So for me, that's the one. This overall move is the 2. And now, here's what I was looking at before. I was looking at that being the end of the 3, which, where was that? Towards August, end of August, early September 2021. And then maybe this was the 4, although I never liked it that much, because usually the 4 should be, if anything, longer in time duration than the 2, and in this case it's shorter. And then I was thinking we're doing this 5 here, and maybe we got the 1, and we're doing the ABC running or expanded flat 2 of the 5, and then 3 of the 5, 4 of the 5, 5 of the 5. But to me, we're consuming so much time here in what still appears to be a corrective period that for this, let me put some labels up. Yeah, I think we'll do that, something like that. Or actually, it would be more like that, expanded flat 2 or running flat 2. For that to be this smaller degree wave 2, I mean, this is starting to rival things that are of larger degree than it. So I don't like that. So what I'm actually thinking more so, because it just doesn't have the right look. It's not proportional, right, in time duration. So what I'm actually thinking is, okay, maybe we, and bear with me here, maybe we actually ended the overall third wave from this point down here from the October of 2020 low. Maybe that third wave was all of this, okay, into the 22nd, or at least the week. This is the weekly chart, so the week of the 22nd of November. Maybe that was all of the wave 3, and now we're actually doing this wave 4, a more time-consuming kind of sideways period to match up with this wave 2, right? Better proportion, and then we'll be going on this wave 5. Now, I mean, I'm not going to currently project how high this wave 5 will go, but just for it to be a proportional wave 5, it would have to be, pretty substantial, right? Well into the 5,000s at least, I'm thinking. But anyway, we won't worry too much about that. So again, now this is a little more subjectivity, right? Because this is the wave count, which from a trading perspective isn't nearly as important as the actual wave pattern in play right now, currently. So let's just get rid of the idea of focusing on the wave count here, even though I've, thrown out there what I think is going on. And let's go to, say, the daily chart and focus more on the actual wave pattern. Okay. Okay. So yeah, we could have our larger wave 3 there or here, but I actually don't even want to focus on that at this point. So let's just remove these larger degree labels, and let's just focus on the price action, and maybe we'll go to the 4-hour chart for a little more detail. Let's focus on the price action since our early October 2021 low. And what do we have for sure? Well, we have a impulse wave. I'm very comfortable labeling that as a completed 5-wave sequence. Okay. Very comfortable with that. Now, what do we got going on here? Clearly, we're in a corrective phase. And we're going to come back to, okay, we have a corrective move down. We have a very 3-wave looking move up, but to a new high. And now we're coming down. Now the bottom may be in, or maybe we got further to go, and we'll discuss the scenarios for that. So what I'm thinking here is, well, let's go through the process. So we could be working, now I believe I discussed this in the last video before we actually really started coming down here. We were actually right up here near the highs in the last video, and I believe I mentioned I was looking for some downside to set up the next long. Well, so far that's playing out reasonably. So again, we got 5 up. Now I think we got some sort of A down. Now in a flat, I mean, this could be a zigzag or a variation of thereof. So it could be a double, triple zigzag. I don't even want to get into the weeds here on the smaller time frame. I mean, there's a place for that, but right now we're trying to get the overall feel for what kind of patterns in play here on this time frame, right? So I'll A down, B up. Now, do we have a running flat already complete here? Because we certainly had a reaction off of it, but now we're coming down. Well, we came down and tested it, but it looks like so far we're holding that level. Okay, so in the running flat scenario, the bottom could already be in, right? In the expanded flat scenario, we would need to come down and spike this A wave low, and that could still certainly happen next week. Okay, so there's that. But there's also another scenario. Okay, so yes, this is a 5-wave move up. Now, is this 5 up for a 1 and we're doing the correction for the 2? Or is this 5 up to complete that larger degree impulse wave, like I mentioned before, that big third wave? And perhaps this action is not of the same degree, this corrective action is not of the same degree as this impulse wave. Therefore, we can entertain something like this. Because if this is a 1 and a 2, wave 2 can't be a triangle, right? But if this is a 5 waves up to complete that larger 3 and we're doing the larger 4, well, a fourth wave certainly can be a triangle. So in that case, we could be working this. And this would accommodate the price action as well. A down, B up, hang on there, C down, D up, E down in a contracting range, right? Now what degree would I make this? Whatever. I'm not going to worry too much about the degree. We can get into that at another time, perhaps, but it's not that important. It's just kind of a Elliott wave geek thing to worry about. Now, in this scenario, we could, I mean, directionally, here's the thing. Directionally, this is all saying the same thing, that we're in a corrected period, potentially completed or nearing completion, and that we should be getting ready for a long bias trade, right? Or position. So in this case, it'd be a running triangle where the B wave makes a new price extreme, a new price high, A, B, C, D, E, or even, we're still not even done, okay? Like this can go on longer, and we could go A, B, C up for the D and still have the E wave later, right? So to me, it's debatable whether we should be thinking that we have a completed price pattern. And one of the things I'm kind of looking at is you often get the bottom or the top of a month towards the end of the month or the beginning of the next month. And we're right in the middle of the month. So to me, to put in the bottom of this pattern in the middle of the month, I'm not loving it. I prefer more, towards the end of January, early February, get a little bit more development, whether we're in the triangle or the running, well, not the running flat, that could already be done, or the expanded flat, right? So that's what I'm thinking there. So right now, not super high confidence about this being a tradable, low in place. I mean, if you want to take a shot, you could go long, and obviously you don't want to see it go below 45.82.24. If you were thinking something along these lines, like, okay, we've done the running flat where it fails to make a new low, and maybe we've had the initial wave 1 up, and we've had a deep, deep wave 2 retracement, and now we're getting ready to kick off into a third wave of the next impulse wave, right? So if you want to try and position for that scenario, obviously you know where to trade against. And certainly you can make some reasonable case for this. Okay, if we do a fib retracement, looks like we came down and hit the 786. We're bouncing off of that nicely as of Friday. So, I mean, there's nothing wrong with trying it. But to be on the safer side, I would just wait for more pattern development closer towards the end of the month. That's kind of my preference there. Okay. What else to say about that? Well, I think I've made myself fairly clear as to what I'm looking at here. So we can probably go over to the Nasdaq. I just want to point out some things there. I think the Nasdaq, I mean, same kind of idea. It's a little bit ambiguous where we're at in the overall wave count from the March 2020 low on the Nasdaq. But I think bottom line, we're in an impulsive sequence that does not appear at all complete. Okay, This does not look like the beginning of some big crash in the Nasdaq. Quite the contrary. This looks like still impulsive waves to the upside and corrective waves to the downside. So our focus should be trying to catch a upside trade. Now in the Nasdaq, this looks a lot more convincing to just be a flat. Okay. Now I think you want to see at least an 80% retracement in the B wave here, and in this case A, B, C. The B wave itself was an expanded flat, so an expanded flat within a larger flat, a larger expanded flat. That's perfectly fine. And then you got the ABC down for the A, ABC up for the B, and we're looking for a 5-wave move down in C. And I'm quite satisfied that the Nasdaq has done that. Now, what did we do here? We went down, we spiked down below the 618 retracement, didn't go as low as the 786 though on the Nasdaq. Looks like good pattern development. So we could have the initial, potentially here, the initial 1-2 of the next impulse wave already here in the Nasdaq, and maybe we're already about to start wave 3 in the new sequence up. And of course, if you want to try and trade against that idea, the level down here on the Nasdaq 100 would be 15,165. That's kind of your line in the sand there. Now, what is also a perfectly reasonable scenario is that we're just going to go a little deeper and take a little longer here in this expanded flat, and maybe where we got 1, 2, 3, 4, and one more wave down in 5 of C for a deeper retracement here in the Nasdaq. But either way, this is a corrective pattern, and it should, once it settles here, lead to another large upside move. So that's what I wanted to look at in the Nasdaq. Okay, that's the Nasdaq 100. Now, if we go over to the thinkorswim candlestick chart, starting off with SPX. So we're back below the 50-day simple moving average, but you can see back here we've certainly had interaction with it and then just recovered it each time. So is that going to happen again? We'll see. You can see we had a bit of a reversal day there on Friday. We opened lower, went even lower after the open, but then recovered to actually have a positive closing day. So if the running flat scenario is in play, and this is our initial 1-2, then we could have a pretty bullish week already coming up. I'm not convinced of that yet, but certainly a possibility. Weekly chart here on SPX. Anything to mention there? No, it's just a indecisive week, doji star week. So even the weekly, not giving much clue there. I think on a weekly basis it closed down modestly, but almost unchanged for the week really. Okay. Well, that's all I need to look at there for the weekly. If we go over to the Nasdaq, I want to go to the Nasdaq composite. Well, no. Okay, we'll go with the Dow first. That's usually the order I do. Dow Jones Industrial Average, a lot less downside so far on the Dow, even though we do have what I think, hang on, even though we have this 3-wave move up to a new high, the Dow sure has a lot, it's got a lot of work to do if this is going to be any kind of a running or expanded flat to the downside. Maybe we're just doing a triangle on the Dow, maybe a really, really weak triangle, and weak meaning, okay, we got the A, we got the B up to new high, maybe we have a tiny little C, D, and E. Let me see if this move actually, okay, this one as low as 35,641.49. This was 35,639.91. Okay, so we can make the case, however weak it may seem, let me just get rid of that we got a very unusual triangle here on the Dow that's already completed, possibly, where we got the A, B up to new high, and then a little C, D, and E. So potential for a truncated triangle, where basically the C, D, and E are just so much smaller in magnitude and duration than the A and the B. Certainly a possibility if the overall market with the S&P and the Nasdaq have bottomed and start a big rally next week. I think that's the conclusion I would have to come to on the Dow, that we had this truncated triangle. And what was that really, or what would that really indicate? Well, to me, that would indicate a lot of underlying strength, that we couldn't even get a, the proportional subwaves of the triangle, or if this was supposed to be a flat, we couldn't even actually get the move, the proper C wave down to make it a flat. That would just tell me there's kind of an underlying bullish tone to the market that's kind of boiling under the surface, but never mind about that. Okay, Dow Daily Candle. We certainly had a long lower shadow. We are supporting on here on the 50-day simple moving average on the Dow, so there's that. I think there's a little bit of a gap down that's so far unfilled, so pretty good chance you get that filled early next week. And what do we got on the weekly here for the Dow? Weekly chart for the Dow. Not a whole lot to point out there for candlesticks. Okay, so the Nasdaq, I want to look at both Nasdaqs. So the Nasdaq Composite has actually been a little weaker than the Nasdaq 100, which understandable because the Nasdaq 100 has all your, FANG stocks, and it's basically the biggest, baddest Nasdaq stocks, whereas the Nasdaq Composite has a bunch of the garbage in it too, which I think under the surface there's been a lot of certain stocks going down a lot more than you might think if you were just looking at the major indices. So the Nasdaq Composite, nonetheless, we have a 5-wave move up and clearly a corrective wave move off of that. We actually had the 200-day simple moving average on the Nasdaq Composite, certainly getting a reaction off that area. So that's something to be potentially bullish against as well. Because how long has it been since we actually did anything below the 200-day simple moving average here on the Nasdaq Composite? Let's just bring that up. Oh, it's been a very long time. Basically, since we first got above it here in, what was this? Yeah, after the March 2020 low. So ever since we got above the 200-day simple moving average on the Nasdaq Composite, we have never gone below. Okay, in fact, we've never even tested it until now. And you know that institutions love placing longs against 200-day simple moving averages, certainly on major stocks and indices. So there is that. Okay, definitely a bit of a reversal candle there. So we opened lower and then closed higher on Friday. Weekly chart, anything to point out there? Well, actually, we're getting a reaction off the 50-week simple moving average. And again, ever since we got above the 50-week simple moving average after the March 2020 low, haven't even tested it. So that's roughly similar to the 200-day simple moving average. So just pointing that out. A bit of an indecisive week. Long lower and upper shadow. Slightly down on a closing basis for the week, but not much. And clearly a corrective, bullish pattern overall. Okay, that's the Nasdaq Composite. Nasdaq 100, we already looked at it on the wave analysis, but just here on this look, didn't even, so you can see the Nasdaq 100 is relatively stronger than the Composite, even though the pattern's largely the same. We haven't even come down to test that 200-day simple on the NDX here. And Friday, we opened lower and closed higher, so potential reversal. And weekly chart on the NDX. Yeah, not much to point out. Again, well above the 50-week simple moving average, unlike the Composite. Explain why that is already. Okay, that's fine there. Now, VIX. Never really got much action here in the VIX, which makes me think, well, it just kind of confirms the bullish bias I think we should be taking here. VIX really hasn't done much to the upside, and you can see it's rejecting. You have these long upper shadows. Now, more importantly, let's go to the VIX VVIX tool. Let me just bring that up. VIX VVIX tool. Okay. So let's see here. We do have a VIX VVIX divergence. So measuring from the same reference point here, VVIX made a slightly higher high. VVIX made a slightly higher high. VIX made a lower high. So you have a VIX VVIX divergence. Looks like we're trying to get back below the red moving average on VVIX, and we haven't gotten above the blue moving average on SPX yet, but we could threaten that early next week here for a potential buy signal. And this would be supportive of the more immediately bullish scenario where, okay, we already have the bottom in and we're already starting the next impulse wave up. Not ready to embrace that just yet, but certainly open to the possibility. Okay, well, that's probably good for this video. And also, you may have noticed I'm wearing a house coat, and I fully believe in just being casual and just being comfortable in what you're doing. I mean, when you go to a real or a regular job, you have to wear a suit or a uniform of some sort, and that's trying to dehumanize you or kind of remove that individualism that I value so much. So when you're at home doing your own thing, why shouldn't you just be comfortable? Therefore, I wear a house coat quite often. House coat life, baby. All right, Serial Trader signing off.